here just before 10:30 in Honolulu, 4:30 in New York on Thursday, the 20th day of February 2014, and this is the daily report for gold and silver. Nice upside rally currently in the precious metals markets as well as the equities markets. Again, moving in tandem, as you can see on the screen, trading up approximately $11 on the day, $13.21, $13.22 and change. The low has been $13.0710. The high, $13.2350. We're currently very near the high at around $13.22 and change. You can see that here on this 240-minute chart. Silver futures also trading higher today, up approximately 29 to 30 cents on the day, 21.78 and change. Low has been 21.39 and the high 21.97 on the day, just off of the highs also. First thing I want to talk about this morning is the power of stops and also the power of having a little bit of luck behind you. Of course, we raised our stops up yesterday and we raised them to below 1307.50. The rationale behind it was as follows. If in fact this market comes down and makes a new low below this retracement level, which is 1307, I've got it marked both on the 240 and our daily, then we could see a more significant retracement or correction in terms of this market move up and some sort of small little correction to kind of settle the paper, so to speak, could go a little bit deeper. And in terms of the price, my belief was that if it was going to break below this point, the next real level to look at was about 1295, and that was right in here. So we moved our stops just below 1307.50. Traders, you should have your stops at 1306, 1306.50, 1305.50, having it below. We did, in fact, avoid being stopped out. You can see these lows coming right to that point, 1307 even. Kitco's low, 1307.10 is data broadcasting or e-signals low, very, very close to each other, but we did not get stopped out, and this market at this point has moved substantially off of these lows right here. As you can see on the 240 as well as on our daily, we're getting this nice long green candle as we go into a very, very nice rally in the market. As I said, trading now about 23.24, so it's back up on the highs. And the easiest way to see the highs, of course, is to take a look at the individual candle, especially on a daily. Let's go ahead and blow that up a little bit so you can see what we're looking at. And you can quite eloquently see how the market traded too, but really not much below that point. That tells me that this is a fairly significant level of support. In other words, when the traders were able to drop this market down at the point it reached around 1307 right here, buying entered into the market, pushed the market up off those lows. And as you can see, we're trading very, very near the highs right now. And the way that we can tell that, of course, is there's almost no tail. So we're just a couple of ticks off the high at 1323.38. That is our current print. So what are we looking at in terms of where we think the market go from here? Well, there's absolutely no doubt this market has been more than resilient to the upside. As we can see this move off the double bottom, it genuinely broke through, various levels. 1277, you can see there was a little bit of resistance right in here. But as the market broke through, it broke through with a fury. Next real level we were looking at was 1307. Market steamrolled through there. Our number that we thought we would get some sort of potential top, and that's this dashed line here, was roughly 1329. Market absolutely came up, tested that area, moved off of that area, but also as it moved off of the area, it found support at 1307 and is now moving back up. So what are our key marks that we're looking at? First of all, we need to break through this current high right in here. That's 1329. And then the 61% is 1338.92. 1336, excuse me, so call it 1337. That's our next real mark. We're going to have to see if it breaks through. Of course, in terms of levels, we've got a major level here at about 1360. That references this top that we had here. We have another top coming in at 1373 right here, and then 1435. So those are our marks. Now, where can this market actually trade to before correcting? Well, that's a question that is a little bit more difficult to answer, because I would have expected some sort of corrective action to come in this area. However, it did not. That's good for us. We're trailing our stops up. And that's why we trail stops up, is because I'm never going to be able to tell you with absolute certainty that the market's going to move to this point or to this point. But I can tell you areas that I believe we could in fact run into resistance, or areas if the market's moving down that we can run into support. So the next real area, the strong area, has got to be up near these highs, and these highs don't come in till about 1360, and that is a good $30 plus away from the market. So my sense is that if the market can steamroll, and it's now trading at 24, can steamroll and go past this one area here, and then 1337, that's a band that's very, very close together. If we can break through this particular band, we are probably headed to about 1365. At that point, there's a likelihood that what we'll experience is a move from here to here, and then some sort of a B. We are still solidly in that A wave, and we haven't really seen it let up as of yet. Now, the next chart I want to take a look at on today's show, it's also a daily chart, but this is a daily chart where we've had some of our major fib retracement areas, especially on the way down, looking for different areas of support. But more importantly, what we have here is our intermediate as well as sub count behind our intermediate count. Intermediate count is 1, 2, 3, 4, 5, some sort of an A, a B, a C. We go into our impulse phase. It fails there. Therefore, the X. We start our bear count. 1, 2, 3, 4. We have, I believe, completed 5, and we are now currently in a counter trend or an A wave. That's the way that I'm currently looking at it in terms of a model. Now, let's go ahead and blow this particular chart up so we can take a look at the daily candles themselves. And we have an absence of wicks. That's very, very good. The candle size is not as large as we've seen preceding it, but then realize we had a couple of days in which we had very, very light corrections in the market, and that's where it actually came back down, tested that 1307. That was yesterday. So in terms of this candle, I'm still pleased with what I am seeing here. However, when I update the charts, this is a daily chart, spot market, gold, we get a little bit of a different read. This is yesterday's activity, and of course yesterday's activity, now that it's been updated, was a doji line. We're not getting the follow through, and in fact what we're getting is another doji, and the market is moving higher. So what does that mean? Well, there are occasions, and we've talked about this before, in terms of how the market moves up and then how it kind of corrects or consolidates, and there have been very, very good examples of the fact where the market came up, it would consolidate or move sideways for a couple of days. You can see the sideways action right here before returning to upward momentum right in here. You can see that here. Consolidation takes quite some time, moves up, consolidates, in this tremendous spike rally. So what we could be just witnessing is this sideways activity, and that's based upon the Japanese average charts. And realize they'll always lag behind, because when you convert this to a standard candlestick chart, you see a quite different story. This, of course, is our standard candlestick chart, and on this we have true opens and true closes. So we have this tremendous rally moving up. We get this top roughly at 1330, 1329. We get the market then correcting. It moves down to that intraday low here of 1307. And now in terms of a two-day pattern, we're back to an engulfing bullish, because the entire body of this candle has surrounded or engulfed the prior day candle. And that is bullish indeed. You would actually issue a buy signal if you had the following day being a green candle with a higher high and a higher low. So this to me is very, very bullish in terms of the marketplace itself. And you can absolutely see that it has corrected to a degree because we got the 23% retracement, came almost precisely to that point, and then just moved up like a rocket ship from there. We're looking at a daily chart. This is our daily chart in which we have our Andrews pitchfork. You really can't see that as well because I've blown this up so that we can look at the detail. And the detail that I'm looking at is whether or not you find resistance at these different channel lines, or if the market continues to kind of burrow through. And in fact, it has. You can see we're well above this 23%. So if that is the case, we have a real opportunity that it's really headed to this upper level line of our hand. You know, traders, I almost felt like the boy that cried wolf a couple of weeks ago because I had been this huge proponent of the fact that we had this long-standing resistance line and a move that would break above that would signal a breakout up, a sizable move to the upside, and we absolutely didn't get it when this line was first questioned or challenged. Let's go ahead and blow this up a little bit so we get a much better idea of what we're talking about and enlarge this. But as this market came up and tested this line, this is where I really felt like the boy that cried wolf, because the market came up, actually opened but closed below it. The following week it closes right at or above it, but not real significantly. But then look at this breakout that we've gotten over the last couple of weeks. This market has genuinely moved from a level of what, around 1260, and that's where we actually got in at. Our first signal that we actually put out was at 1258 to 1266, depending on where you got in. And now we've seen the significant upside move. Currently, we're trading new highs, 1325.10 on the day. So we are at new highs. And when we look at this in that perspective, there's no doubt we've had a tremendous breakout. Last week, we had a tremendous upside move. This week, we are now recovering from the slightly lower prices that were the characteristics of this market earlier. We're not getting that now. We're getting a move back to the upside. As you can see, now trading 1325.10. We are on a new high for the day. So traders, what about silver? Well, we have no active position in silver. Looking at it in hindsight, we probably would have done well putting on a position in silver, but it was clustered so tightly in that range. And then when it did break out, this is a 60-minute chart, broke out with a fever. You can see that activity right in here. As the market came down in gold the other day, we trailed our stops up. And that was because of my belief that we could, in fact, see the market dip below that 23% retracement. It did not. I'm satisfied with the fact that we're long gold and that we're just increasing our profits at all times. We'll look for a place to position ourselves in silver. But as I said a couple of weeks ago, if you're a silver trader, put your money right now in gold. You actually would have gotten a better return once it broke, because you've got silver returning to its glory where it outpaces gold in terms of percentage gains, also outpaces gold in terms of percentage losses, depending on whether the market's up or down. I do believe that we'll see gold and silver continue to run in tandem. We've absolutely broken out of that sideways channel that we saw in silver. So it's simply a matter of how we want to position ourselves in the marketplace itself. When we compress this chart, you can get an idea of what I was looking at with this long band, and it was at this point here that we had that significant break, and that occurred really roughly at around 2050. So we're up near the highs again, just looking to see if we can challenge $22 an ounce, currently trading $21.81. And as I said, I'm satisfied, very satisfied actually, with the performance we've had on our gold trade. We'll look to position ourselves in silver, but that's secondary right now to the fact that we are really making up any kind of losses we had at the beginning of the year. And of course, we're in our fourth year of trading, our track record has shown, 4 years of profitable trades, this being the 5th year, and I certainly want to keep that tradition. We are now officially in profits on the year, and it's very, very early in the year, I do know that, but I feel a lot better than having a couple of trades that were drawdowns. Those are now behind us, and we're moving forward. This is Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.